We are so well prepared. We've brought the best investors here today. So quickly, I'm Jeremiah Owyang. I was a speaker at the last AI Infra. I'm a venture capitalist, but I'm focused on the app layer, way up high on the stack. So not quite investing in AI Infra, but I brought the experts. Maybe you guys can introduce yourselves real quick. What do you invest in your company? Eric, take it away.
Eric, Scale Venture Partners is a $900 million fund. We do A, B, C rounds, but mostly A rounds. Investing in B2B software. Increasingly, though, a lot of that software is operating data centers.
Awesome. And what size checks do you like to write?
10 to 20 is typical, but we've done as little as 5, as big as 40.
Nice. Anand, welcome.
Good morning, everyone. Thanks for having me, Jeremiah. Anand from Celesta Capital, and I also am helping build a company that I started last year called Crescendo, which is one of the portfolio companies of Celesta. So, kind of multitask as a founder and investor. We are about $1 billion raised, 4 funds. We're in Fund 5 now. And we mostly invest in deep tech, semiconductors, high tech and biology, and AI-powered sort of industry transformation plays. So those are 3 areas.
Got it. What stage, check size?
Series A, about 5 to 10 million usually.
Got it. Welcome. Nawaz.
Hello, my name is Nawaz, and I'm the managing partner for Aurum Group. Aurum Group has 2 different asset classes. One is the Aurum Venture Partners, which is a VC firm focusing on deep tech, fintech, and smart enterprise. Our check size is close to $1 million. We focus on Series A opportunities. And Aurum Equity Partners is focusing on building next generation data centers. That's a private equity firm. It's a $1 billion fund, and we are the first one to tokenize the data center asset class.
Excellent. Well, as a app level investor, I really need you guys to get the infrastructure together or we have nothing. So Nawaz, I want to start with you. You've worked in the trenches in data centers and power, and right now there's a bottleneck for power, hardware, and there's a 3-year lead time on energy, or 2 years. Yeah. And this is already outdated, but a 200 kilowatt rack, is that even true? And so what are you seeing? Are we running out of physical infrastructure runway?
Yeah. So if you look at, historically, every time when there is I would call AI as more as a revolution, every time when the cloud or any kind of industrial revolution happened, there's always going to be a recalibration which is going to happen, and it's all at the same time. So one of the big things, as you can see, the kind of rack density which we are seeing, it's not anymore in the past. Earlier, historically, if you look at most of the data centers, I come from Equinix, where we used to build for the last 20 years 5 to 10 kilowatt rack, and it was very standard. It's more of an infrastructure play. Now, the last few years, you can see all the way anywhere. You keep hearing from 100 to even the latest one is 1 megawatt per rack.
What?
Right, which was recently announced. So it sounds crazy, but at the same time, you have to look at the ecosystem. The energy companies, they are not prepared for this. So obviously, they are revisiting the entire strategy, and it's going to be a short-term squeeze, but at the same time, it's an opportunity. It's an opportunity for a lot of companies to recalibrate, to re-strategize how they are going to approach this. One of the first thing what we have seen is all about capital efficiency. How do we make sure that when we invest, they are looking at more of earlier it used to be a tier 1 cities. Now they are looking at tier 2 and tier 3 cities as one of the options. So it's gone beyond the prime locations. The second one is always looking at optimization from energy, from cooling, all the technology optimization which needs to be reused. So heat reuse, not just in the power side, but also from the cooling side, is some of the innovations which we are seeing is prime important. So these calibrations are going to add up, and as you can, over a period of time, this is going to be very critical for an alliance between the government, the regulations, the customers, and how the investors are going to get the maximum benefit of that. So that kind of calibration is happening right now. And we are, as we speak, we are looking at almost 1 gigawatt data centers which are getting built up. And the lead time, as you rightly said, it's going to be more of a 3 years to 4 years. So what they are doing is we are working with the local regulations in order to come together. They are not anymore just a utility provider. Now they are part of the ecosystem of how the infra is getting built.
Amazing. Thank you. Clearly, you have a lot of expertise. Hey, Anand, I'm going to go over to you, all right? You're on both sides of the table, right? You're helping one of your portfolio companies. You're also a VC. How do you think about underwriting the infrastructure plays when there's latency, GPU utilization? How do you identify a profitable company as an investor?
Yeah, I think there is almost like a barbell strategy where on the one hand, if you heard sort of what Satya was talking about 1 or 2 months ago, that he's sort of looking for the GDP improvement because of the data center build out as the metric of profitability and yield. On the other side, the company that I'm building is a AI powered contact center, and that is an example of how old businesses can be reinvented with a lot of automation. And we were chatting earlier about that.
Yes.
Those employees that are hard to
AI
find.
first.
AI first sort of employees. And so I think that is another example where, as a result of all this innovation that's happening in the infra layer of the stack, you're now seeing almost like you can underwrite that sort of automation because the costs just keep going down over a period of time, and therefore you can take a business that looks like a 20-25% gross margin business and suddenly start to envision it as like a 35, 45, 50% gross margin business. And so I actually am really excited about some of that. The operating principles, obviously, that people are worried about their jobs, but I think that rather than AI replacing jobs, I think it's a person with AI is going to replace a person without AI, right? So a lot of the combination of human plus AI automation can, at the end of the day, provide a lot of profitability to where the value is captured. I do think though that at the end of the day, at every part of the stack, you have to find your own sort of sustainability, right? Because otherwise, we've seen, for example, for those of you who were here in Silicon Valley during the .com period, you had all this network build out, but those companies never became really big. If you remember the WorldComs and the Excited Homes in that generation, they ended up funding a lot of the growth of the internet services, but they themselves never became sustainable over a large period of time. So I think history does offer us some lessons in that.
Anand, do you think those margins, so you have BPOs charging certain rates today, you add AI, you get better margins, but do you think those margins hold up, or do they get commoditized over time, and you're back to kind of BPO margins in the end, just kind of AI powered?
I think it kind of varies from employee type to employee type, okay, right? But in our business, what we're seeing is that you can very safely sort of add another 10 to 15 points reliably, and then after that it becomes scenario by scenario. Also when you can save that many points, sometimes the other folks in the other stakeholders sort of say, look, you're not offering me as many people. Is there a cost benefit? Is a cost advantage to me from all of this, right? So then the question becomes, are they paying purely for a cost advantage, or can we offer them elevated service that they pay a different price for? Okay. So I think it's it's definitely ripe for rewiring, right? What gets priced and how it gets priced, et cetera.
So just want to add on that aspect is, most of the startups or most of the entrepreneurs, what they have to think through is, how do you improve the customer experience? This is a great opportunity with all these agentic AIs and every aspect of it. We have been talking to a lot of entrepreneurs who go above and beyond, which was unforeseeable. Just to give an example, earlier the data center talent pool was very difficult to get. Now they are looking at even how can a robotics company can come in and provide a 24/7 rack and stack kind of services. That's the kind of customer experience which they want, which improves the capital efficiency as well as the customer experience for those customers. Right, that's a huge advantage. So taking above and beyond, not just at the basic level, just like how earlier the cloud adoption was inherently adopted at a later stage, but now the AI, with all the advancements of AI, how they can adopt and go above and beyond what they thought about the initial product. That is very important.
Let's get to the hot topic that everybody's thinking about. Eric, you kick us off. Global, local, tariffs, regional, national, trade. Like, how does that impact AI infra?
So McDonald's and KFC were like the first global restaurants, right? Before that, everything was a mom and pop shop. And I think data center is similar. Everything was a mom and pop shop until public cloud showed us how you could elevate a local business into a global one. You have a single API for lots of local data centers. And AI, capacity crunch, plus now this kind of new global normal is kind of upending that. I think there's a lot of question marks. Is public cloud still the viable future, or we kind of retreat back to a more like regional cloud?
What's your take?
The business model is so good, it's inevitable that we eventually go public cloud. Like, if you could have a single API for regional things, you'll figure out how to make the regional things compliant. You'll broker the right deals, but that single API is so great for higher level services. If you want to run a Snowflake, you connect it to AWS and then you have compute everywhere.
All right, you have a different take, guys?
Yeah, just from the investment point of view, one of the big takeaway, obviously, as you can see, the tariffs and everything. Most of the providers of AI infra, they have already recalibrated how they can provide or shorten the supply chain, or how they can revisit the entire strategy. So they are going above and beyond, identifying the regions where, not just about the power, but also about the resource and the local governance is coming into play. So one of the aspects which you guys should always look at it is now with the tariffs, a lot of laws in different counties and different cities have changed, and there's a lot of support system which comes in if you are getting involved in any specific aspects of manufacturing, which is a key component for data center or infra. So that should be leveraged, and that will make a big change of how the regulations can be taken for an advantage.
Do you think that benefits new entrants? Like, if existing entrants have to reconfigure their supply chains, maybe the advantage of an incumbency is not as strong, and maybe it's just as good to start new.
Right. So if you look at the existing players, they have already established supply chain people, and for them it's very difficult to recalibrate or revisit the entire strategy, how they have been running the portfolio. But for new entrants, it gives them an advantage. It's a playing field where they can start thinking completely how, from 5 years from now, how it will look. So they have already recalibrated of how anything can be built out and provide capital efficiency specifically for the investors, because these are huge investments. If you look at just for 100 megawatts, we are looking at 1 to 1.2 billion just on the infrastructure level, without the servers and all the GPUs and all those things. So if you add up that, it's more like 3 to 4x of the investment for 100 megawatt.
Yeah. And also, I think each region, each geography is also figuring out their own model sovereignty as well as data sovereignty by region. So if some parts of the world already have the concept of champions, right? Not in data centers and AI, but like in other industries. And we're now seeing LLM companies and even data privacy, data protection companies in each area sort of provide resilience in that region. And it's one area where hopefully that complexity doesn't introduce friction is if you're a consumer company, all of a sudden you have the challenge of being geographically resilient, model-wise and data-wise in each of these regions, right? Like now there's
plus regulation, plus culture, plus language. Like, yes.
Yeah, like we were chatting about GDPR like a few years ago, and now there's the AI version of that, which hopefully that is an opportunity to simplify so that the next set of companies can abstract out that complexity. To your point, that could be an opportunity for a new player to abstract that out for each of these higher level companies.
So all this chaos in the market, as an investor, what are the opportunities that you actually see? Like, what are you looking for?
I think these are the two macro trends, right? I think that I sometimes say that having lived through the internet, mobile, and cloud, this almost feels like all of those three put together times something, right? It seems like the impact of this to impact real
AI.
What's going on with AI.
Yeah, it's massive.
Because it is, we're not talking about just the consumer experience, right? We're talking about like large sectors of GDP being rewired. And then I think the other macro trend is, I'd call it politics trumping business. For 20 plus years, a lot of us would not consider the need to go to DC and understand which way the winds are blowing in politics. But now, so many decisions are politics trumping business. So those are really the two macro trends, right? On the one hand, the hype around AI is really real, and the level of automation that's possible is quite mind-boggling, and that's just what we can do today, right? Like with model advances. And on the other hand, we have to navigate this almost like balkanization, nationalism in different parts of the world. And by the way, that's not just about AI, right? That's in other industries.
What's the investment opportunity, and what should the entrepreneurs and builders here do, guys?
I think there's some of the biggest companies have always come up out of like compliant gray zones. Like Uber was like maybe illegal at the beginning, and OpenAI was copywriting people, and YouTube was stealing copyright. I think in those compliance gray zones, and we're seeing a ton of them emerge because all these different governments now have different rules. I think if a startup can savvily navigate these compliant gray zones, there's no competition, right? Because everyone's just a little scared to enter into those areas.
That's a great point. All right, guys, go do everything illegal. Eric said so. What do you think?
So my take is a little bit different. For example, if you look at from the investment point of view, it's very important to have some kind of multi-diversion. Basically, if you looking at every government is looking at how to adopt AI, not just to leverage what is existing. So they want to have their own sovereign LLMs or sovereign, based on their data sovereignty, they want to have their own defense or wherever they are going to use. They are not just going to adopt like how the cloud has been adopted. Mm-hmm. This is not something, this is a completely different trend. Every country is looking at that opportunity, so which opens up a huge TAM for all the entrepreneurs to think, not just locally, okay, if I am able to build it for, let's say, US, it's not going to work like that. It's not going to be adopted everywhere. So you have to make sure that wherever you are taking your product, now the market is big, much bigger, and you have to customize, should be able to customize those solutions for other regions. So that gives a huge advantage for both entrepreneurs and for investors to see the portfolio growing much higher from where it was earlier.
I'll add one other take. I think that for the last, call it like decade or so, most of us, especially in Silicon Valley, were sort of software providers to some industry. And ultimately that industry made the decision to own the relationship with the customer. And we were all providing tools and software and capabilities. I think with what is possible now, there's if you're a founder thinking about starting something in a space, you can actually rethink to what level you can own the end-to-end offering. And I'll give you like a very crazy example of this. If you take drug discovery, for example, right? There's sort of a well-known, well-worn system, and because of that, if there's a really interesting paper published in Nature, it's going to take 10 years for that to become possibly a drug that helps our families and ourselves. And we're seeing advances combining sort of biology innovation, hardware innovation, and AI in really accelerating those kinds of things that you assume to be true, that it is going to be a 10-year process. Now it can be like a more personalized, more accelerated process. And so, as I think during the internet era, I think we heard this this quote that like we're going to underestimate everything in the short term, and we're going to overestimate everything in the short term and underestimate it in the long term. I'm really excited about founders who are rather than thinking about what incrementally can I do in a space, that now they can say with what is possible now, how can I just kind of reimagine, the end-to-end process and maybe innovate more towards all the pieces. And we've talked about that in data centers. I think that's going to happen in biology. I think it's certainly happening in industry transformations. We talked about contact center it's happening across these industries. And I think that the innovation will be adopted at different paces in different industries, because there's if you're an AI law firm, and if you miss one filing and you lose a lawsuit, well, guess what? Like, that's going to set you back like many years in terms of adoption. So different industries will adopt it at different paces, but it is somewhat inevitable that that's going to happen.
So just to give one aspect of it, because I know a lot of founders and entrepreneurs are there. One of the things which I have seen is the way they are able to do the market sizing has changed tremendously different from earlier what it used to be. Now with the AI, they are seeing a much bigger opportunity.
Yeah,
So that is a huge advantage for them, how to look at that. Obviously, the team is the most important when we invest in it. But now the market sizing, because market sizing defines how your product is going to get built.
So that's actually the next question. So VCs, we like to pump up the deals that we're in, and maybe downplay the ones we're not. But with Microsoft pausing builds, CoreWeave's IPO whiplash, and hyperscaler recalibrations, are we in a bubble? Or are we just breathing for the next wave, or are we on a decline? Let's talk about the macro for AI infra investment as an economy.
Yeah, I would say I think we're all getting used to a tech company being at $1 trillion valuation still over the last couple of years.
Yeah.
And previously most investors were set up for we're backing companies really early, and they're going to go public in a few years. And at that point, we're not going to be owners in those companies anymore. I think what all of us are preparing for is with both the market size, the TAM expansion because of AI, and also the tech company. Every company is a tech company now, right? It used to be the tech companies were the vendors to the non-tech companies, and now Uber, Tesla, Airbnb, like they're all tech companies, right?
Yeah, Visa, hotel companies, car companies. Car companies are tech companies.
Exactly. And so in that universe, I feel like the way you're underwriting the team, the way you're even looking at who should be part of a team, if you are delivering at the end of the day a healthcare service versus software to healthcare providers, how do you develop expertise on your team that someone's delivered care before, right? So I think it sort of makes you rethink as a founder, what is the composition of the founding team, right? Versus previously it would be like, we're a couple engineers, like we don't know that much about much else. But I think as a founder now, you're forced to think a lot more about, what do I do if tariffs happen? What do I do if war happens? What do I do in terms of delivering care end to end? So there's a lot more complicated topics to think about. So whether it is founding members, advisors, like that's a really important part. Used to be we would say, oh yeah, these are just bad times, they'll change. Like 10 years ago, it'll go back to normal. I think this is now the normal, right? Like it's never going to go back to anything else. And so you're almost developing a different kind of founder archetype to navigate these areas. And also, if your TAM is this big and you're attacking that TAM end to end from day one, you're going to compete with a bigger incumbent a lot sooner in your trajectory. Like previously, until you go public, like big companies aren't really tracking you all that much. But now as your ambition goes up, the big companies start tracking you a lot sooner because you're going for their core business. So I think it's just a very different time to start a company. Actually very exciting, but also when you're starting out with that kind of ambition, it's important to convert that ambition into team composition, multidisciplinary thinking, et cetera, from day one.
Eric, jump in.
Are we in a compute bubble? No, the AI has no limits, it feels like.
No limits?
It's crazy. But I think we are in a bit of a startup valuation bubble. CoreWeave may be the last train to leave the station. Google TPUs, Amazon's going to vertically integrate on the chips. And I think it's going to be hard for others to kind of, there's a window of opportunity with the capacity crunch to join that cohort. But that cohort's just going to scale from here and deliver most of the compute.
Yeah, so I'll give you a different perspective on this particular question. So let's talk about the Microsoft and CoreWeave. We all saw the results of Microsoft, and the majority of, obviously, it shows how the adoption of AI and the cloud, and they went back and revisited their entire portfolio of how and where they want to build. So there is a reinvestment happening. Nothing has stopped. Second, the moment they said it's, because we work very closely on the data center opportunities, on the power and all those stuff. The moment they paused those contracts, it was picked in no time by other vendors. It's just an opportunity for getting that power. So whatever 20 billion or 30 billion worth of lease contracts which were let go, they were picked up by other big players like Meta or Azure, or AWS. The reason being is, overall people are looking at how it can be diversified. The investment has to be diversified. It cannot be in one region like how the cloud was. So it's not just a bubble, but it's not about, there's nowhere we are close to the investment what is needed. If you look at the kind of power requirements, if you look at the kind of technology advancement which are required, it's not going to happen in one region, one investor coming in. It's going to be multiple, different kind of players. Governments are getting involved in investing through their sovereign. We are working almost with 3 different country governments, including US, where they are ready to invest for this, which was never the case during the cloud. Now they are coming up with big checks because they know the kind of investment needed. So these are great opportunities for countries in LATAM and all those places who are opening up the doors because they know that they have the prime source for all this AI, which is the power, right? So that opens up a completely different landscape, which was not there before. So it is just getting to reshift the overall spectrum of how the investment has to go. And the investors, specifically the institutional investors, they also want to have a diversified portfolio, not just with one particular region, one particular vendor. It's more of just like a multi-cloud, they want to have multi-vendor. There's no more vendor lock-in kind of things which they want to see.
So given your experience there, what are you seeing the timelines for building out a data center focused on AI? Here in the US, what's your forecast? And overseas, what are you seeing? Because there's a big demand right now.
Absolutely. So if you look at traditionally, any enterprise data centers, it used to take 9 to 12 months. That was the timeline because the power requirements, the cooling requirements were very low, 5 to 10 kilowatts. It's in no time, you start building the infrastructure, multi-layer. Now with the kind of cooling technology which is required, you cannot go multi-level, because of various stringent requirements. Now, just to get the power in US alone, in majority of the places, there is 3 to 4 years of timeline required.
Years?
3 to 4 years.
The software startups are investing in need it in 3 to 4
exactly.
months.
And this is where the government has to come back and rethink. Okay, what are the other alternatives for that? The SMRs, which was earlier, it was nowhere close to that. The other governments are looking at how SMRs can be a prime source for the kind of power required, because the power requirement is going to be the key essential aspect of anyone to advance in AI. The requirements are going to change, and the local governments and the infrastructure, which is not ready for this kind of power, has to be revisited.
Nawaz, it sounds like you're arguing that the demand, the ability to extort on prices shifts from people who have IP on software and hardware to people who have power.
Absolutely.
So that's
Wow.
where and what's interesting about that point is I think people fail to realize that market size isn't just the number of dollars, but it's also the number of buyers, customers. Like if you only have 3 people to sell to, even if you move a lot of money, you don't have pricing power with those people, with Google, Amazon, Microsoft. But if you're right, that there's a bunch of data center buyers out there, now you can build a company and you can sell to 100 people. And now you can have pricing leverage.
Exactly.
I think another interesting opportunity is, at the same time that the hyperscalers are moving at a rapid pace to build out more NVIDIA-powered data centers, they're also thinking about the dependency and the resiliency against that, particularly, given the future, modeling. And one of the things we're seeing is then they're sort of saying, partly because of that opportunity, we've seen Marvell become a $100 billion company almost. I don't know, maybe they've gone down in the last 2 weeks. Broadcom is close to a $1 trillion company. because they are supporting this resiliency away from one stack, one set of chips. But I think like there's probably the next set of opportunities, both to serve the next next level customer, whose total dollar value might not be as high, but it's still high enough, and they may not get the attention of the top one or two, custom ASIC, custom chip providers today.
We just have a few minutes left. I want to poll the room real quick. How many of you are founders? CEOs, founders? Oh, wow, over about half the room. That's great. Gentlemen, if you could talk about what you're looking to invest in, this is your opportunity. Maybe it can be some matchmaking as well. Eric, do you want to kick things off?
Anything, technical tools for technical buyers. So the head of IT has a big problem. I want to fund a company to help solve that problem. At the Series A or B stage, you've got product market fit with a few of those buyers, and we've scaled several companies to IPO.
All right, wrap it up.
Yeah, I mean, like I was saying, we like any differentiated IP. I feel like when I first moved out to California, like that was like what VC was investing in, and we've gone like full circle and come back to deep IP, differentiated technology, even selling to the government, which if you sort of look at the history of Silicon Valley, there was a lot of that, and
Yes,
we're coming back to that. So we're interested in any sort of deep IP in semiconductors. We've been talking a lot about AI infra. We have some of the fastest growing chip companies, which is becoming a very important area of investment. And I think that's also an important ingredient of this US versus China piece that's happening. So we're very interested in that.
Thank you.
Quickly, I think our focus has been more on the fintech and deep tech technologies. Now with AI infra in play, I'm seeing quite a few companies who can really looking at the big potential of that. So definitely that is one great area in fintech and deep tech where we are interested in.
Everybody, give the panel a round of applause. Thank you, gentlemen.